Is Bitcoin the new leader for the S&P 500? Forget about the trillion-dollar company. And is this the new predictor for where we're going to be going? And the reason why this matters is because Bitcoin dropped by 20% overnight on Friday. It hit a low of roughly 42,000. It is now down by nearly 40% off its peak. The pattern is so hard to ignore as I look here. So I'm actually going to provide a little bit of insight here in terms of what you get when you sign up for the Pro membership on Slack. Is that I've been using this template as my move higher and my move lower. So specifically, this move right here on Bitcoin, where we had the mega pump on the W, was exactly what led to the pattern here on ES or SPY. We had an inverse head and shoulders, and that was my buy signal. My sell signal pretty much came in at this arrow right here where BTC formed a head and shoulders with a roughly 5,000 neckline and then rejected hard. ES started the exact same thing. So the question for me now is, are we going to repeat this potentially major lower like BTC put in for 20% overnight on Friday? And that could take us all the way down here to 436. Or 4360s, 4370s on SPX and ES. So this weekend's going to be a little bit more bearish right out of the get-go, just because I think the base case is that we're going to go down. This has been a very accurate predictor for me. And as I have a look at the levels, I have a look at the fundamentals, I have a look at the potential news cycle, I see everything that could point to a move lower. So if you're enjoying this video at any time, I would really appreciate that thumbs up. And I'm giving you some member content this week just because I think this is a really good time to sound the warning bell. About 2 weeks ago, 2 weekends ago, we said, is the market crash coming? And then we said, now what? And I was predicting that we were going to fall down to this lower support line, which is exactly where we closed out on Friday, basically. BTC took that as a cue for a fresh leg lower. And that's what I want to try to go through this week. What evidence is there that we are going to get that move lower? And what specifically will we need to see to invalidate this bear case, to avoid the stock market crash of 2021? Well, I'd also preface this by saying that we're going to look a little bit later in the video, but I think this dips for buying. The question is, we don't know what the bottom is until we look back in hindsight. So we just want to try to get a reasonable assumption of what do we want to see to know that we're not just finding a bottom, but we are reversing, not dead cat bouncing. So the pattern that I was looking for into Wednesday of last week, and if you go watch the video, was 454 into Wednesday. That pretty much set up, and then we closed right around that area on Friday. So, all right, I'm undecided. As I look here at the ES chart, we have a pivot on the 50-day moving average, and we closed slightly above it. However, going back and just looking at history for roughly the last 2 years, anytime we get 2 consecutive daily closes below the 50, that's pretty much signaled that we're not going to be going anywhere. Just like here, where if we fall below it for 2 consecutive days, I don't think we're going to get a rally between now and end of the year. And I'm seeing a lot of evidence from Goldman Sachs, notably, that is telling me that maybe 2022 is when we actually start the next leg higher. So just quickly looking here as well, what this would also give us is a roughly 40% from peak to trough drop for BTC at about 39%. If ES matched that exact same decline here from peak down to the uptrend here where the question mark is to form that triple bottom, just like BTC did, that's about 9%. 7.5% to the trend line, and then about 9% to the 200 DMA. That would be just below correction territory. Why? Well, 10% is a correction. So it looks really close here. That's almost a crash, right? 50% is like a major correction. Anyways, looking at ETH or Ethereum versus NQ, which is the NASDAQ futures, I'm seeing a similar pattern too. Because these things trade, I personally think that BTC is like SPY, and then Ethereum is kind of like the sexy new kid on the block, like the NASDAQ is. So when the patterns match up, I get more confidence that this is what's likely going to happen here. And again, if you guys wouldn't mind smashing that thumbs up and dropping a comment, that would go a really long way this weekend, because this video was hard for me to make because I don't like telling people that after a big nasty cut, we're probably going to go lower. So this pattern here pretty much just shows us that where we closed out on Friday for NQ was bouncing up the 50-day moving average and getting slightly back above. So we could be at this part of the pattern. We could also be at the part here where we're just going to waterfall now. So the lower part of this support is down here at 15,200. And this corresponds with roughly a 29% drop from peak to trough on ETH And if we go down to track that exact same low here, which is pretty much the pivot from the W, that would be about 9%. Again, just under that technical correction of 10%. That's the highest takeaway for this weekend. So we're going to start there. And then we're going to go over and just have a look at the thumbnails. So again, I don't like doing bearish thumbnails. It's much easier to make money going long, but can't ignore it this week. So what's going to cause the drop? Those are the two most important charts. What we're going to go through for today's schedule is we're going to go through the calendar events. We're going to have we're going to come back, have a look at the ETFs and indicators, have a look at the option clues, algos for members only. If you want to join, you can find that there. And then finally wrap up with some SPY analysis. So I'm aiming for about 20 to 25 minutes to make sure that you can replay this video if needed, because I really think it's really important this week to make sure that we understand the potential for more downside. I forgot also the fear and greed indicator. So the market's been oscillating between fear and greed, and right now the market's going into extreme greed to extreme fear. We're whipsawing and moving so fast, and I think that the market could stay irrationally more fearful than people think, and that could last for another month or two. And like I said, I think these dips are for buying. As long as the technicals hold up, I'm going to be looking to buy, but buying a dead cat bounce is not the same thing as buying a reversal. A dead cat bounce, by definition, means that we don't form a higher high. We take out the relative low, but don't form a higher high, and then we resume lower. A reversal is when you take out the low and the high. So we got to do both. And we didn't see that going into Friday, so I de-risked again. I've trimmed back what I bought this week. I'm aiming for prudence and just trying to protect the low on the account. We're going into the end of the year. It's been an incredible year. And I'm ready to reset until the trade is so good, I can't say no. So we're going to be talking about the virus now. And again, I'm not here to get political or to tell you what you should be doing. We're trying to look at the headlines to understand what is likely the headline risk for the week. As we have a look here, again, the variant mutation signals vaccine evasion. Just look at that headline. That should be a little bit scary. This came out on Saturday morning, but similar symptoms to the common cold. So if it's able to evade the vaccine, that is a major problem. Why? Again, it's going to probably cause a lot of fear. Instead of getting into the specifics of this, what I want to go through is that, again, it is higher to transmit. It's less lethal. But what matters for us when it comes to the stock market is it will take scientists weeks of careful lab testing to study exactly what the mutation means. What does that mean? We're potentially going to have weeks of headlines where we're might be seeing conflicting data, and we're not going to get a definitive answer from the global health authority until we actually know what's going on. What is a couple of weeks from now? That's the end of the year. So if we're going to have potentially a huge clusterfuck between now and end of the year, I want to make sure I know about that. The other risk as well is that the US has not talked about lockdowns, reinstating travel bans or lockdowns. So when we talked about the leg lower on Bitcoin, I could easily see that happening with some kind of travel ban, some kind of mandate, which Joe Biden would have to walk back from. And by the way, he sounded pretty sick on Friday, right? He sounded sick. So that's a potential bear catalyst as well. So I'm trying to think about how could ES or S&P 500 replicate the drop on Bitcoin? Well, this is basically saying that the vaccine might be useless when it comes to this mutation. Again, we don't know for a few weeks. Reinstate some kind of policy that they're going to have to unwind from last week, and maybe impose tighter restrictions on travel. So now as we go through the rest of the weekend video, we want to try to see whether or not we want to break bullish or bearish. Again, not looking for what we want, looking for what is actually happening. And it's hard to argue when I look at the technicals, look at the fundamentals, look at the options, look at the algo, that we're going to go up. I would love to be wrong. I would love it. I would love if this virus just went away and we could start living our lives. The risk for me is what we're going to see here as we go through for the next couple of slides here. So public health policy may need to shift away from goal of trying to eliminate the virus from circulation through vaccination to instead focus on preventing severe disease. It's possible this virus is here to stay. What does that mean? This is a very tough conversation for the world to have. Why? It's been 2.5, almost 3 years that we've been collectively stuck at home. And if this new variant potentially means that you might have wasted the last couple of years, that's a very tough conversation to have. And just seeing the outcry from countries like South Africa that they're now being travel banned, this could potentially be a big geopolitical problem. And there's already other problems that are already brewing. So it doesn't make it easy. There's this article here again. New variant versus Delta. What does it mean? It's likely, again, what we talked about before. I don't want to say too many bad words because I know all this stuff is being censored. So looking at the next article here, what I want to focus on is U.S. inflation probably continues to rise at a rapid clip. This is from Bloomberg, their email where they send out once per week talking about the weekend roundup. Second thing here is that Germany's first new chancellor in 16 years is set to be sworn in. So Germany's currently where there is an outbreak happening in Europe. And with a new chancellor, it means that maybe they're not going to handle things as well as they did before. They're new on the scene after 16 years. That's a long time, jumping right into the fire. Second thing here is inflation. That drops on Friday, that's the 10th. If this number coming in at a rapid clip, that alone could be enough to drop the market. This plus the risk of the variant, whew, right? I'm already seeing how we could get down to 436. I already see it. Continuing here, Goldman Sachs, right? They've been good at calling everything. They call everything. Whatever they call, it just happens. It's like through some stroke of magic or manipulation, wink, wink, nudge, nudge, that they make it happen. And what they're telling us here is that, again, they did not lower their S&P target, by the way. They're lowering their growth forecast. So they cut their U.S. GDP growth forecast for 2022 over fears. They're cutting it down to 3.8. Just uncertainty. That means they can re-raise it again, but for now, they're dialing it back a little bit. Next thing to look at here, geopolitical tension. U.S.-Russia tensions on Ukraine erupt as top diplomats face off. And again, when one country's leader looks sick, like Joe Biden did, that's usually a time when the other team wants to take a shot, right? Attack when they're weak. That's what it looks like so far. So there's multiple things. There's also, again, the Asian country and trying to invade as well. It's not good. In terms of just looking back now, right? There can only be two, right? Yeah, two. And that's what Cathie's telling us here too, right? All of the stocks in Cathie Wood's ARK Innovation Fund are in a bear market except for two. So some are down as much as 80%. Right? That means it's already crashed. It's not crashing. It's crashing again. It's already crashed though. So I don't know, right? Growth is pretty much toast. We look and see what happens to DocuSign on Friday. It was down like 40+%. I think they're trying to create a narrative where they're trying to de-risk everything. Next thing here is where I think that right now what Jerome Powell is doing is providing himself some optionality into the meeting on the 15th. So have a quick look here. We can look and see that on December 15th, the Fed is going to be responsible for the asterisk. The asterisk means that for their 2022 meeting, 2021 meetings going into the end of the year, they're going to have to provide a summary of economic projections. And what I think is really important here is that the crash was likely going to happen anyway with this new variant. What Jerome Powell, if he would have just said, oh yeah, right, print, right, we're not going to do anything different, he would not have had the option to say, we're turning the tabs back on. Or I'm going to go back to being a little bit more neutral to dovish. Right now it's pretty hawkish. What does that mean? He's bearish for stocks. And on the 15th here, after we have more data from the variant and after we have that CPI print, he's going to have to provide a summary of economic projections. So if he does what he said he was going to do and accelerate faster, the market's already baked that in. And if he provides some kind of walk back, so we're gonna taper faster than we wanted to here. But if something happens with the variant, we're ready, willing, and able to do what it takes to provide that liquidity and accommodation again. That's what I think he has right now. Just saying those extra words. I'm gonna do what I said at the last meeting, but if things change and it gets a lot worse, we're gonna step back and do exactly what the ECB did. So what the ECB did here, again, they said, we're taking away accommodation. And then they're like, wait a minute, what? Oh, what? Actually, Lagarde says 2022 hike unlikely, but ECB will act if needed. As of right now, there are 2+ rate hikes baked in for the Fed going into 2022. Whatever happens in Europe is usually a precursor to what happens in the US in terms of weather, in terms of monetary policy. So the stage is set where Jerome Powell can be more dovish and create a sustainable rally through 2022 if we don't see a rate hike. If we're probably gonna have to get a correction out of the way between now and then though. So what does that mean? A 10% cut on the major indexes, not on individual stocks, not on ETFs, on the index, S&P. If ES drops down by 9%, or maybe down to 10, it closes below the 200 DMA briefly, like the DAX just did, by the way. what would happen? Boom, market can reset and we can rally up all the way into 2022. That's the bull case here. So the bear case is that the virus is going to dominate, and the early feedback and the crypto move is telling me that maybe it is. So just trying to be mindful of that. But again, Jerome Powell now has optionality, which he did not have before. He was kind of pigeonholed into being the dove, and it's a really tough spot to be in. All right. Finishing off the story here and going through Goldman Sachs, here's why it's particularly interesting to me when I look at the Bitcoin chart. I look at ES, and then I look at where are they focusing right now? They're not really focusing on the stock market lately. They're focusing on crypto. So this article here says that Goldman Sachs and other Wall Street banks are exploring Bitcoin-backed loans. Whoa, what WTF? Bitcoin-backed loans. What? It's not even fully regulated yet. How are these guys getting ready to do loans? And the question you have to ask yourself is, and again, I went through here to try to piece together the parts of the most important, but I encourage you to go to the channel, SPX, pop open the thread, and look through all the articles if you want to find more. I am not a subject matter expert. I'm just trying to figure out where my stock's going to go next week, and I'm realizing that what happens to Bitcoin is increasingly more correlated and important to the stock market, so I can't ignore it anymore. And the fact they're making these moves and the timelines were provided tell me that they think, before they said crypto was a new asset class. It doubled from there. Now they're saying that we're going to do loans. If you were Goldman Sachs, would you want to take a loss on a loan for Bitcoin? If not, how would you make sure you know that you're not going to? Well, by doing this, the try repo. You can go through and read what it means. There's a link right here to the New York Fed. It's from the NASDAQ. This is a reputable source. What I want to go through here is just talking about these, though. So most banks would not custody physical Bitcoin to make the loans, but instead resort to synthetic products such as futures. The idea is to emulate a tri-party repo agreement, blah, 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 blah. Goldman was working on getting approved for lending against collateral and tri-party repo. One of the people told CoinDesk, and if they had liquidation of agents, right, if there was ever like a massive crash and now you're defunct on your loan, like Elon Musk was potentially going to be on his Tesla shares, then they were just doing a secured lending without ever having Bitcoin touch their balance sheet, which means they can underwrite the Bitcoin loan, and because they are a hedge fund, they can hedge it. So they're like, hey, you're person X, you've got pretend $1 billion worth of Bitcoin at call it 50,000. Sure, we'll lend you 10%, 20%, 50% of that in cash, but the value of your underlying asset to offset it, meaning what are you putting up as collateral? If it's the Bitcoin, then it has to make sure that underlying value is held. If pretend you had $1 billion worth of Bitcoin and you took out a $500 million loan, and now Bitcoin drops by half, the bank now has this much worth. Zero. If they loan half of the value of your Bitcoin at 50K and it drops down to 25, and you got a $500 million loan, the bank is now potentially they're definitely at risk if it goes lower. It goes below 25K. Now they're eating a loss. Banks don't like losing. So how can they make sure that if they were to do these loans, that they're not going to get hurt? Specifically inside of here. Actually, I'll just pop it open really fast. I think it's worth actually looking at this. It's been 18 minutes. I got a little bit of time. Just look at the pretext here. It's from the New York Fed. So the 2007 and 2009 financial crisis exposed weaknesses in the design of the U.S. tri-party repo market that could rapidly elevate and propagate systemic risk. So Goldman wants to get in there, right? They want to get their beaks wet. They want to get those fees, but it could provide a systemic risk like it did in 2007, 2009. So how they're going to make sure they don't get hurt? Go watch The Big Short. They got out of that, right? They got out of The Big Short. They're like, yeah, sell. So they know how to avoid it, and they're doing this ahead of time this time. There's a second part to what I want to talk about for Goldman, but looking at here, just continuing the story. So a second person said others plan to use their own balance sheet. So I think that Goldman's going to want to do a mix of both. They got into crypto early. They called it a new asset class. They want to do crypto-backed loans. So if they're going to be loaning out at a pegged value of pretend 50K, and then it drops down to 25, they're like, man, we just lost money. Why did we even do this? So what are they doing? They're probably running a test right now over the weekend to know where are the buyers, where are the sellers, and how good are we at manipulating this? And by the way, it's not regulated. It's a lot easier to manipulate crypto. So why wouldn't they? Right? Why wouldn't they? They can make their nut, and up until these things become legal, they're good to go. They're like, yeah, you know what? The floor is actually 40K. So if we're going to loan out, don't do a loan to value ratio above 50%. If that doesn't make sense to you, just know that Goldman wants to make money. They don't like to lose. So if there's a major crash, they don't want to lose. They're hedging themselves right now. Looking at the last part here, according to the report, Coinbase and Fidelity Digital Assets were cited as potential custodians to banks with they had discussions with. Who was spoken to Gary Gensler, the Coinbase CEO? Who was Goldman Sachs initiated a price target on? Coinbase. Who's likely going to be the agent for Goldman Sachs? Coinbase. Coinbase also has crypto on their balance sheet. Oh. And Goldman also likes Novogratz, right? Mike Novogratz. They love that guy. He used to be a Goldman boy. So what does that mean? They got their own guys, right? They got it. Looking at the final statement here. In October, the Federal Deposit Insurance Corporation, FDIC, chairman said U.S. regulators were exploring ways for traditional banks to hold Bitcoin. 1 month later, the FDIC issued a joint statement with the Federal Reserve and the OCC on the matter, saying that the three agencies would provide greater regulatory clarity in 2022 for banking institutions interested in engaging with Bitcoin. What does that mean? It's in 2022, maybe Q1. When again, this is just a timeline. It's not a guarantee. It's a timeline of when we could hear about actual regulation on Bitcoin, meaning when Goldman Sachs can actually pull the trigger and start selling loans into 2022. That's what's really notable here. So if we're not going to get back above the 50 DMA and we're going to go into a bear market and Bitcoin is the leader, it's reasonable to assume that we're not going to go anywhere until we get regulatory clarity in 2022. And that means that if we're dipping now, going into the regulation, there's a chance that we could what? Go higher, just like on earnings. If we dip into earnings and earnings are good, we can rally. If we rally into earnings and they're meh, we go down. So we've had a 40% haircut now, right? On $1 trillion single asset class, that's $400 billion went poof. Yeah. And then there's also Ethereum. So, all right, separate story. Anyways, looking at the next data point here. Now, again, from December 2nd on Thursday, another article from Goldman Sachs in crypto. All right, if you guys wouldn't mind smashing a thumbs up, that'd be appreciated too. I might turn into a 30-minute video anyway. I apologize. It's hard to get all this stuff out because there's just so much going on right now. All right, next one here. Goldman Sachs sees crypto options market as next big step for institutional adoption. If you understand what they said earlier here, again, let's just read this one more time. Goldman was working on getting approved for lending against collateral on a tri-party repo, right? Which basically just means they were doing a secured lending without ever having Bitcoin touch their balance sheet. Others planning having it on their balance sheet. So if they want to underwrite if someone wants to offer them pretend $100 million loan and they're like, you know what, we find this one risky, they can still say yes and they can hedge themselves the right way. Why or how? Options. These guys are great at options. They're fantastic at it even. There might be equity funds. Again, this is from the Goldman guy himself, right? This is the Goldman. His name is, what's his name here? Kazad. I'm probably mispronouncing that. He's the head of crypto trading over at Goldman. I just underlined what I thought was relevant here. There might be equity funds that have an exposure to a stock that they have underlying Bitcoin holdings. In order to hedge that exposure, they might trade futures against that. What's better? Buying an option. And again, if you're underwriting a loan, which is basically like a stock, it's a security, right? We're underwriting pretend a $500 million loan. We can either go into the futures market and short the hell out of Bitcoin, or we can just buy a couple of options, which is insurance, right? They're going to pay us pretend $50 million in fees. It's going to cost us $25 million to go get those options to secure. And on the worst case scenario, we net $25 million, right? Call it a day. Right now, they can't do that, not as easily. And to get that exposure on the $25 million of short futures, they're going to be moving the price. So they would much rather be the buyer and seller of the options, in my opinion. Finally here, Goldman loves making money. So look at this chart. Again, it's in the article. Encourage you to click on it if you want to see the whole details. But open interest in Bitcoin options, or a total value of outstanding contracts, stood at about $12 billion as of the latest data from Skew, a subsidiary of Coinbase that tracks data on cryptocurrency derivative market. As recently as the first half of 2020, the market rarely exceeded $2 billion. There's so much premium out there. They're like, oh my God, there's so much premium. We need to get in on that. So I think this is very important. The second thing I would notice that I personally think that the credit cycle, meaning where we currently are, not the seasonal chart, not the seasonal cycle, the credit cycle, hood, toast, all-time lows on Friday. GME, I don't think it's going to rally. AMC, don't think it's going to rally either. The Cathie wood trade, it's toast. right? She's got 2 stocks. She's got 2 left. They're not in a bear market, just 2, right? That's it, just 2. And what she basically said is just wait for 5 years, right? Give it 5 years, it'll turn around. Jeez, 5 years? Wood said her strategies are set to quadruple over the next 5 years after their underperformance this year. Oh my God. If the stock is down by 80%, for it to quadruple, you get your money back. When? In 5 years. What a tough proposition to sell. In 5 years, you might get your money back. I've got 2 winners right now. Yeah, right? Rock on, baby. Whoop. Again, smash a thumbs up if you're enjoying the content. Thank you. So in my opinion, the test that we saw running onto growth stocks on Friday, again, when DocuSign, a like $40 billion company, closes down more than 40%, Asana closes down by 25%, even Adobe got crushed almost 10%. Everything is in risk-off mode right now. We're seeing China potentially moving stocks back to Hong Kong. We saw the DDD listing. There's just broad-based de-risking happening, even without the risk of the variant. And what I am noticing, though, is that year-to-date, the crypto market caps have gone absolutely nuts. So where is Goldman moving the casino to? They're moving the casino where there's still people left who got money. There's no more money in Hood. There's no more money in the ARK trade. There's no more money in GME. There's no more money in AMC. There's no more money in Dogecoin. So how can they get paid their premium if there's no more money left there? They go to the one market that's left. They go to crypto, where there are still hundreds of % gains, and people are leveraging on the risk. What are they doing? They're scaling up the risk as the charts keep going higher. So what does that mean? There's money out there. This is where the money is. This is where they can afford to actually play. So I think we're going into the final stage of the credit cycle. And I think if we're going to have a sustained rally through 2022 and then start selling off into maybe 2023, that means that Jerome is going to basically say what the ECB already did, right? Oh, by the way, we're not hiking in 2022. Whoop! And then we hold up for all of 2022, we defer to 2023, and then there's a global coordinated rate hike that happens. And by that time, the last bubble to get inflated in this current credit cycle is going to be crypto. And those are going to be some easy bags to hand off, right? Everyone's going to be like, oh my God, crypto's going to get regulated, time to buy, right? Sell the news hard. That's what I think is going to happen. All right, we're already at about 27 minutes, so I'm going to start going a little bit faster now, but I think crypto is becoming increasingly important too, the way that we look at the stock market. And when the market caps for all of them are worth about 2 to 2.5 trillion, a 20% drop is literally about $500 billion in value, deleted overnight in a couple of hours, couple of bars. So that's the potential here. There's already de-risking happening everywhere, and the timing is right around when we saw those headlines from the new variant as well. I don't think that's a surprise. They're running a test. Finally, it's a very light data week. So what does that mean? The risk this week, in my opinion, is going to be when we hear about updates on the virus, the variant, and then notably what happens on Friday. We got initial jobless claims on Thursday. We got core CPI coming out on Friday, but I have no idea when these headlines are going to come out for the virus, what they're going to be. All I know is that I'm already prepared for the worst case scenario. What does that mean? Another 20-point drop on SPY, a 5% down week. So again, like I said, when we went through the video like last weekend, like 2 weekends ago, I said, what are the warning signs that the stock market is crashing? And I think it's safe to say that now the stock market is crashed. The question is it done crashing, or are we going to crash again? I think we're going to crash again. So if you're still watching, I really much appreciate your support. If you wouldn't mind smashing the thumbs up and drop me a comment. Is Bitcoin the new major market? Is the new leader? And finally, as we go through to this next section here, if you stuck around all the way through here, we're now going to try to understand what evidence do we need to see to know that we are going to resume back up or we are going to resume lower. It's not that complicated. So now we have the backdrop of what do we think is going to happen as our base case. And now we want to look at the evidence to either confirm or deny what we are seeing underlying. All right, let's go through. I'm going to go through the options first here just because it should be fast. And again, just think about this as Goldman Sachs is already ultra efficient in the options market. Doing something else, doing options in crypto is just going to mean they're going to be excellent at that too. Goldman is excellent at whatever they do. They have all the connections, they got all the money, all the time, all the resources. So looking here, this is going to be the chain for next week. On Monday, we got a 450, 445 put spread. It's pretty big. What's notable here is the premium attached. So 450 minus 250 is equal to 447.50. That's the break even on these. The 445 put, which is $5 out of the money. No, even more than that. We closed at 453. This is $8 out of the money. It's worth $1.50, and it closed up. Whoa. Yeah. Over here on the call side, we got a spread between 455 and 460. So max pain for me kind of looks like somewhere between 450 and 455. We have to see what converts into open interest as well. Looking to Wednesday, I see the same thing. This for the 16s, we don't see 445. There's about 20K there. So again, for Wednesday, 450 put has about $5 in premium, which implies 445 break even. People aren't just betting for Monday, they're betting for Wednesday. This is usually what we don't see. Usually Wednesday's muted. This is muted compared to Monday, but it's still notable. Over here we have the exact same spread. 455 to 460. So what does that mean? 455 is the pivot still. It's the 50 DMA. It's the previous all-time high at 454. Now we look out to Friday, and here's where things get a little bit more interesting. And I went beyond the 16s this time. I went 20 strikes below and 20 strikes above as the most likely range that I am seeing potentially playing out. Starting here at 450 for the put side, we see 450s here, still about $5 in premium, 52,000 in volume. That's big. Then we go down to 440. Then we got all the way down to 430. People are positioned for this. If we're going to get a move lower and we're going to get a gamma squeeze, meaning that these puts are now close to in the money, if not at the money or in the money, they're going to have to short the underlying stock or S&P to make sure that they don't lose their shirt on this. So I think the big fight's going to be on Friday, and that's when the CPI number comes out. It's going to really matter. So they're already positioned. There's OI here at 436, 435. Oh my God, what was that number we were talking about? 435? So 436, 437, something like that? What? Yeah, they're already positioned. They got a put spread right here for open interest. 21K, 20K. They got it. There's also a put spread between 450 and 440 and 440 and 430. Whoa! It's like the exact numbers we were looking for. Yeah, it's like the exact numbers we're looking for. Like we have the cheat codes, and all we have to do is make sure that we're aware of them. Yeah. All right. Looking on the call side for Friday, super muted. We got a call spread here between 460 and 465. That's it. Looking out to December monthly, here is where we are seeing some continuation. So I'm talking about if we're going to get, again, the variant might take a couple of weeks before we actually know what is going to be the true deviations versus Delta, meaning is it better or worse? It's going to be a couple of weeks. What's 2 weeks from now? It's monthly OPEX. It's triple witching. It's the FOMC. Oh, crap. It's like everything comes together right now. Yeah. So looking at the put side here for December monthly, nothing's dramatically changed from previous months. They've kept it in the money, but now's our chance to go for it, right? And the fact they're buying all the way out this aggressively on the put side too, December tells me that with VIX elevated at 35, I think it was like a 35 plus, people are still willing to go out and buy options for December. I'm talking in big numbers. They're seeing short-term risk. And the other thing we have to ask ourselves is, if we're actually going to get that 10% drop, there is the motivation here on the put side to squeeze this out. Everything's going to reset and expire on December 17th, which means right now I'm seeing very muted activity out to January because the options are just too expensive. So everything's positioned here for December. After this resets, if they did have to short S&P to cover these puts or buy puts to cover their exposure, they're going to unwind those, meaning they're going to buy starting on December 18th. Sorry, on the 20th or on the 20th. That's the following Monday. They're going to start buying again, going into Christmas. So what does this mean? They're making sure they cover their butts here, right? There's a ton of volume, right? 450, 445, 440, 435, and 430. Yeah. Right? Look at the numbers here too, right? 100,000, 84,000, 50,000, 60,000, 142,000. Those are big numbers. Look over here at the call side now. It hasn't really changed. The numbers are half, right? 40, 49K in OY, 40K, 50K, 42, 45. Nothing over 50. Not a single one. What does that mean? More people are putting money down on puts when VIX is jacked up right now. Why? I think I know why. They see what I see. So looking here, we got all the way back up to 470, which is our end of year target, but a target has already been hit. Doesn't mean we're going to close on December 31st. Goldman Sachs was right. We did hit 470. They were right. We hit it. Do we have to close her on December 31st? Don't have to. The target's been hit. There's similar activity here. So 450 up to 470, and right now the ATR or average true range on S&P is nearly 7 points. It's doubled in the last 2 weeks, which means selling options right now is a great game. Just got to make sure you don't get burned when you sell the wrong ones. All right, moving forward here to QQQ. QQQ, pretty muted, but again, 380, it's similar to the 455 put spread. Sorry, put we were seeing on S&P. So more skewed bearish here. Looking at Wednesday, it's muted, but continuation. Looking out to Friday, continuation here at 380. So again, that's a bear tilt. No big bets, but bear tilt. Looking out to QQQ monthly, I see a 375 and 400 straddle. So the straddles here are worth about $19 and $1, so that's worth about $20, which means their break even is going to be at 420 or at 380. And then looking here at again, what do we see? We see volume at 380. Oh my God, it's like there's math at work here, right? Oh my goodness. Looking here at the 375 straddle, we got about $14 and $7. I'll call it 21, which means 391 break even, or basically 350. Woof, right? Yeah, that's bad. So just watching there, big numbers. That's pretty much it. There was some activity on VIX every day this week. There was nothing notable on SPX, and I excluded it only because the dollars at work were only about $50 million when we saw previous straddles for the S&P in the billion-dollar range. So basically, it doesn't matter this week. We're going to skip it. It's going to be a longer video this week. I apologize. I'm trying to go as fast as I can. All right, so there's our evidence. They're betting bearish. Even with the VIX jacked to shit, they're still betting bearish on it. Only out to December 17th for the most part, which means things are going to climax into then. All right, moving forward. Next thing we're going to look at here is going to be the ETFs and indicators. So looking over here, we now have ETFs and indicators. I'm going to go through these a little bit faster. So let's go through one by one here. QQQ. We were looking for a 383 backtest. It's right where we closed, right at 383. So backtest of the previous top and closed just over on big volume. For me, this is not a reversal candle. We got fat volume closing near the low. That's not a reversal candle. That's a dead cat bounce off of 380 to the 383 area. That's what it looks like to me. The move we saw in Bitcoin overnight looks more like potential capitulation because there's massive volume and a massive wick. Don't see one here. I.e., this is a pivot for next week. We're either going to push below the all-time high, like every other chart we're going to look at next already did, or QQQ was going to hold up the S&P, and we're going to pivot off the 50 DMA and move back up closer to 460. What does that mean? We can't form a weekly lower low. This is a pivot for next week. Back over 387 starts a reversal, and a daily close below 380 gets us on track to get down to this 370 apex. Meaning, if we print a weekly lower low and close below 380, I think we're going to 370 minimum. 350 is our 50 weekly moving average here. As we keep going through, you'll see why that yellow line is pretty important. Looking over at XLF, hit our target here. Hit the 61% retracement. So we hit it, bounced off of it, dead cat bounce, big volume. Support every 50 cents down to 36, with the Fibonacci's down to the 50 weekly moving average at about $36 here. XLV, big volume, tight apex, right? It's prone to breaking and retesting that 125 area and the 50 weekly moving average, the yellow line. Volume is increasing and plies down. IWM, the template we've been using to the downside to move down to the 50 weekly moving average and then even lower. So 210 apex this and next week, it's really important if we don't hold. If this is our template for more downside, I would want to see the IWM break down first. What does that mean? If we lose 210 on IWM, big volume and a micro wick lower, which means people were getting complacent here. Now they're rushing out. It looks very similar to last week's candle too. Micro wick on the bottom and volume is pumped. Looking at DIA, there's the 50 weekly moving average test. It's tracking IWM. If it's going to go below, just has to pivot below 340. Printing a weekly lower low is going to do it. 50 MA, or the 50 weekly moving average, is a test and a dead cat bounce so far. Back above 350 starts the reversal. Why? Because we're going to be at the uptrend and breaking the downtrend. We have to form a higher high to confirm it's not just a dead cat bounce, it's a reversal. That's the start of the reversal. Closing below 339 or the 50 weekly moving average is going to confirm that we're losing the 50 and we're likely heading down a lower. All right, moving forward. What did close green this week? XLU. We looked at this notably before. 2 reversal candles, just like on XLE. Closing near the high of the week, up 1%. Big volume. Bullish hammer and pass on an apex. Uptick on volume. That's bullish. People are fleeing to safety. The warning signs are already on the wall. XLE, opposite of XLU. So inverted hammer and a hammer. Unfazed with the strategic release and OPEC increasing production. What does that mean? They're calling the bluff. They don't believe it. Last 2 weeks are double reversal candles, so closing above 56.5 or below 53.5, in my opinion, sets the next move. We've been just chopping up, so a weekly close, either above or below, is what I'm looking for. Otherwise, it's going to stay range bound. TNX bear break. Normally when TNX goes down, tech stocks go up. So what we're seeing is that people don't want treasuries. They're bidding up treasuries, which means they're going down. They're buying XLU and they're buying gold. What are they selling? Crypto, growth, and tech. Oh no. Yeah, oh no. VIX, bull break. So we're seeing a bull break here on the VIX. Like I mentioned, people are going crazy, selling VIX calls, selling VIX puts, and buying VIX calls and buying VIX puts. This is a breakout. It implies increased volatility. Higher high, higher low, and a 7% week. That's a pretty big move. Looking at XAU now, looking at XAU here, holding bullish IHS on the weekly chart. It's holding, right? It's holding up. It's below the 50, but it's holding up. Looking at the monthly chart, looks bullish. Back above 1800 should start a pump. If we're going to see the opposite happening on what's happening to crypto, it should get back above 1800 and start a rally. It's just like XLU. It's the opposite of what's its counterpart, like QQQ. Looking at DXY here. This is a monthly chart. I'm looking at it as like a head and shoulders pattern. It could also be a W. I'm just looking at it as a head and shoulders. And if we break above 97, I think we're going to 100, which would add even more pressure to U.S. equities. NYSE. Dead cat bounce off the 50 weekly moving average. Already tested it. That's 2,000 stocks collectively in a composite or an index. 2,000 stocks have roughly tested their 50 weekly moving average. Cool. RSP, or equal weight S&P, repeating the pattern of many others. Dead cat bouncing off the previous top. It's got a higher low. Next top is 146 in the 50 weekly. There you go. Big volume. It wants that 50 weekly moving average test. That's a big pump in volume there. They're dumping it. ARK. Oof. I'm including it this week just because we saw the story from Cathie, right? In a bear market. Yuck. IWM ready for the breakdown. So is ARK. Where do we go next? Probably 70. I've been noticing they're going after her book. Like everything that she owns are like pew 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 pew, and they're taking them down one by one very effectively. So ARK here, massive M, right? See that right here? There's the start, there's the midpoint, there's the finish. We break below 91 from a weekly lower low. Woof. Yikes. FXI, which is China, weaker, right? Yeah, yuck. Closing at a fresh 52-week low. Yuck. RSX, which is Russia. Head and shoulders with a 29.5 neckline. It actually bounced last week. It's up 4%. Failing to get back above 29.5, it's probably going to go down for a breakdown. EEM, or emerging markets, indecision after a bear break. What does that mean? It's probably going to go down. Close lower than it opened. That's why the candle is solid green, not hollow green. Big nasty cut. Doji, it probably wants to go down. That would be my base case, even though it closed green by 0.5%. All right. Aren't you excited for this next trading week? Oh, thanks, Justin. Thanks for telling us we're going to drop potentially by 20 more points. Sorry. Okay. Finishing the story off here. Let's see whether or not now we're walking around the S&P and figuring out whether or not we're kicking the tires, we're lifting up the hood and seeing if there's anything we don't like. So we talked about a few key areas. Now we're going to look at the S&P to know that. If we want to look at one number to know, how do we know we're bearish or bullish? I'll tell you where it is now. On the monthly chart here, we're resting roughly on the 452.5 key pivot. And that just means that looking back to these previous months, we closed there, faded right there. This is a major point. If we fall below 452.5 on a monthly basis, the back test here is roughly 438. The number's already there. We got a previous top. It's really important. 438. Keep that number in mind. Next major support is down at 438. The weekly chart, we got power slammed on a massive chop back down to the previous top of 454.05. Dead cat bounced to previous all-time high at roughly 454. It's about 60 cents off. Just over the 50 daily moving average, just below the previous all-time high. Printing a weekly lower low means we're likely going down to the 430s. Why? We're going to be pivoting off. We're going to be breaking this channel here. We haven't done that, right? We've never actually pierced it, but we've never actually pivoted off of it. So if we now actually pivot off, it'll be the first time we've done that going all the way back here to this time last year. Why? We pierce it, but we don't actually close below it. We'd have to form a hammer going into Friday to avoid that pattern. So again, back above 454 means that we're likely going to pivot up. Falling below the weekly low, probably going to pivot down. All right, finally here, this is the number here. So now we're looking at the 50 daily moving average, which is really important in 454. So we're right on the 50 DMA dance. 1 day below, 1 day above, 2 days above. Okay, cool. 447 and 436, there's gaps in the chart. There's a gap right here. There's a gap right here. There's a gap right there. There's 3 gaps. We filled almost one. We got one here, and then one down to here. That's how we get down to 436. Same level as on the monthly. We gapped up. So looking here, 2 daily closes below the 50 daily moving average is a signal that we are correcting more. The arrow on Friday is the 10th, which means we could reasonably be at 441 on Friday with there be no damage to the funnel lower or the channel. So where did I put that 456 area actually? Here we go. So 456. So now we're going to look at the hourly chart, and this is where we start to know that we are actually going to be invalidating the pattern. We actually even have times here. So before we hit Friday, we're gonna have Thursday. So 444, the white arrow on Thursday at 11 a.m. That would be the lower part of the channel if we keep cutting down. As long as we're above 443 by Thursday, there's a chance we could bounce into Friday. If we fall below that, that's the bear break. The bull break would come by breaking the channel over 456, which would also be green on the month. Over 459 would confirm the hourly reversal by taking out the previous high over here. So not only taking out the relative lows, but taking out the relative high and breaking the pattern, getting out of the channel lower. So if we're going to stop going down, we have to start going sideways and start going back up. I don't know what that would look like, but that's what I'm noticing here. They're both sides can say they won because looking at the daily chart, we're right on the 50. So if the bears want to make a move, they're going to pivot off of it. The bulls want to make a move, they're going to pivot up. I'm assuming it's going to be down, looking at the data and everything that I've looked at going into here. So I think that we are potentially going for a couple of days of really tough trading. And the next early feedback system I'll be looking for is just, can we actually get above 454 and 458? 454, 456, 458, every 2 points higher. 454 is taking out the previous all-time high. 456 gets us green on the month. 458 starts the reversal on the hourly. That's all we need to know for this next week. Otherwise, we're going to assume we're going to keep going down. And remember, we need a 4 o'clock printed close to make sure those levels hold. Intraday ranges are nice, but we got to see what actually holds going into the overnight market, because that's what people are willing to agree to hold on to going overnight. I wish you guys all the best of luck this week. And if you feel like you need some help, what I would encourage you to do is to head over to the website here. There'll be a link in the description. We have a Slack group. It's a stock trading community. I'm going to make a specific strategy for me to trade through this. I'm planning on making a whole bunch of money between now and Q1 of next year. And if this dip happens, there's going to be incredible buying opportunities. If you don't want to join us, then what I would encourage you to do is to maybe replay the video and make some notes. And finally, this week might not be it. If we start to crash, like I mentioned, December 17th is when I think we're going to climax. That's where we want to make sure we got buying power for. So if you're at zero cash right now, and next week we start moving lower, I'm not a personal financial advisor, but I will be personally de-risking even more to raise cash for December 10th, early feedback, and then December 17th, early feedback. Wish you all the best of luck. I would really appreciate a thumbs up, and otherwise, I will see you guys for the normal, regular scheduled streams on Monday. Thank you very much.